The room was full. It was actually a lot more people than the last week.
We have quality over quantity.
That's true. This is true, right? Okay, so my name is Julie. I actually work for Upward Management. I've been there for a little over 6 years. I came from the West Coast. I was born and raised there. I was born and raised in California. So a lot of the things that you'll see, or at least I won't have the accent that some of you folks have. I'm very envious sometimes when you guys talk. So, gosh, we have music and everything. Okay, so let's go on. You know what? I would poll the room and find out who's in accounting or whatever, but there's so few of you. So is there anybody that is actually in accounting? Or are you all owners? All owners. Okay. All right. Well, you may or may not find this particular it's going to be somewhat boring, possibly, just because my speech is basically geared to the actual people that are working in accounting. So with that, how many people in the room enjoy reading a book? A good book? Yeah, I don't. I tend to go to movies, and when I do go to a movie and they tell me that the movie was based off of a book, then all of a sudden I think, well, maybe I should go back and read the book. Because a lot of times in the movies, they never tell you the details that actually lead up to the ending. So I'm not really sure if this is the ending and the way it should be, or if it could have possibly ended a different way. And so that is the whole premise. I really like this. It kind of makes me feel like I'm on Wheel of Fortune. But anyway, so we're going to start at the audit and the financial reporting. We're going to start there and go around and come back to the audit and financial, because I think it's important for you to know just who your audience is when you're working on your financials. The reason for that, everybody goes, well, why do we care? Well, the reason you care is you're not talking to the same people. The account specialists or the bookkeepers, they're all talking to management. Management are the folks that are actually pulling the financials together. They're reviewing everything that has been put into the books. They're the folks that are trying to get all your reporting ready for the owners. Okay, so the owners, on the other hand, you're looking at the reports to try to figure out, should I be borrowing money? Are we actually doing well? Do we need to do something different? You're looking at the bottom line to make sure that it's all accurate. You're trying to make decisions based on those reports. If the reports are not accurate, you're making poor decisions, right? So you're counting on your management team, on your accounting team, to make sure those numbers are clean and that you know what you're reading is not a fictional book. This is real. This is life, the way it is right now. The bank is looking to you to try to make sure that your numbers are compliant with what they're trying to actually have you do. So they're looking at the numbers to make sure that if you have any issues or any problems, or they don't like the way things are looking on your financial statements, they're going to up your interest rates. So it's important. They need to know exactly what it is. They're not looking for just a story, and they want something that's all reality. And then there's the internal revenue, and that's really sad when they come to your door. But when they do come, you want to make sure you're prepared for it. You want to make sure that your books are clean, that you have nothing to hide. The minute they feel like you're under pressure or that you're not doing well with the fact that they're even at your door is when they all of a sudden show up and decide that they're going to pull a lot more than what they came down for. They're there to find something. That's their job. And they'll find it if they feel that you're not confident with the numbers that you are presenting to them. Okay, so let's go ahead and start with the beginning of the book. So in RTO Pro, or Rent to Own, and I shouldn't have said RTO Pro, but in Rent to Own business, just in general, the beginning of anything that we do is with the contract. The contract is our starting point for accounting, as well as just being a starting point for everything that we actually do. So when you're looking at that, you want to make sure that all the information that you are gathering and that you've gotten from your dealers or whatever, that it's been inputted into the software correctly. But hopefully not by somebody in accounting. If you can help it, you don't want this information inputted by accounting. What accounting's going to do afterwards is they're going to come down here and make sure that everything that you did or inputted it into RTO software is actually accurate. So they're not going to use the information out of the RTO. They're using the information that's right off the contract. So these are some of the things that over here on the left that you're actually going to be looking for. You want to make sure it's got a name. Obviously, it's not only should be a address that you can mail to, but you have to have a physical address on there. You want to make sure that you've got your cash price, your rental terms, and your signature has to be valid. Even if you're doing it through DocuSign. I mean, they can have a printed signature out of DocuSign, but it can't be just your dealer calling up and saying, oh, this person said that I could do this. It's a phone confirmation. The bank won't accept a phone confirmation. And if you're having to go through any kind of audit, which is they refer to it as AUPs, they're agreed upon procedures. If they're doing that, you want to make sure that you have all this information tied up. You want to make sure that that you got all of this tied into it, and make sure that every piece that's up here is valid. Without that, when you go through your AUP, and if this information isn't inputted into your RTO software correctly, it's deemed as an exception, is what they refer to it. I call it a ding. Bottom line is they will ding you for it, and in their world, they have a point system. For every error that you have going into here, they put a point system to it, and that's how they determine what they're going to be giving you as far as interest rates, and or if they're going to loan you any money if that's what you're looking for. So this is how you actually put your contract into your accounting software. This is the first time your accounting software is actually going to see anything that had to do with that contract. Okay? So you've got your manufacturer, your account number, your cash price, customer size of structure, but what really is important is the serial number. We use that serial number to verify whether we've paid it before, whether we've seen the building before, whether it's a repo and now we're actually paying for it again. This part right here throws up all kinds of red flags if it's not accurate. And we go through the process of making sure it's accurate every time that it gets put this far into the accounting software. So you should actually have the contract on one side, or at least looking at it on your desk or whatever, and then all this information is added in. Because the contract has the manufacturer's name on it, and it has everything that you actually need. If you're taking it from the RTO program, you're not sure if anything that they actually put in there is accurate. You can fix that afterwards, but what you can't fix is this. If this goes out and you've got the wrong manufacturer, the wrong hauler, or whoever, it's too late by the time it goes out. And now you're having to go back and make adjustments and fix things that probably should have been caught the first time. Okay, so we do this weekly. We actually pay our vendors and our manufacturers weekly. So we go through these process of doing reconciliations weekly. And part of it is to make sure that the structures are in there properly. The top snippet is a snippet from the RTO program, and the bottom part is a snippet from the accounting part. These were on the actual checks, so they actually came from the contracts themselves. This actually came from the contracts as well, but it's from the people that were entering the contracts into RTO Pro. For us, we have a portal software, so it was uploaded that way, which again, may or may not have been right. If they didn't acknowledge the fact in the portal that the building was a repo and not an actually new building, we could have had this in here twice. That would have been off, and this would have been off. It wouldn't have matched, because we would have caught it because we saw the contract, but they didn't. So now we have to go back in and delete the contracts in there, or in the RTO program that we have, when our portal brings it in, it brings it in as a duplicate, so we have to get rid of one of the buildings and replace it with the other. But it helps us to keep from actually making any kind of duplicate payments on our buildings. We reconcile the cash once a week as well. This is on the deposits. So the deposits, when they're brought in, or when the contract says that it was dealer kept, that's what all these ones mean. That we didn't actually get money. The dealer decided they were going to keep it for whatever reason. Usually it's because it's their commission from the manufacturer. So they'll keep that part of it, and we have to acknowledge it and put it in here and then deduct it from the manufacturer's check when we pay them. So that it should, if it's done correctly, you're going to end up having this here, and then these were deducted from the manufacturer's checks up here. So these have to actually tie out weekly to make sure that whatever was in RTO Pro is in the accounting software as well. So let's sidestep a little bit, and we're going to talk about our commissions, which means that we're going to back up on our slides a little bit. When we actually pay our commissions and our hauling, they're coming from actual invoices. And so we actually go in and we put in the invoice, we put in the serial numbers, we do it just like we do a regular check that we're actually paying out. The difference is, once we've done that, we actually run a report on this as well, on every single serial number, to make sure that it looks like this. This is how we keep everything from duplicating, from us duplicating anything, any commissions, any hauling bills, any barn buildings. Obviously, if it's a repo, it's already been paid for. But if we come through there and it's got an additional dollar amount in here, then we know that we're paying for it again, and we need to find out, did we actually, the company that we were working with, was it a buyback and now we're bringing it back in and we're purchasing it again? Or are we actually paying for it again and not without really realizing it, and we have to go all the way back into the process, into RTO Pro, the RTO software, to make sure that it is, we actually did pay for it once and we shouldn't be paying for it again. Again, this hauling, it says pickup, so if we had the hauling bill and we got a hauling bill and somebody decided, okay, well, you know, that company picked it up, and now we've got two of these, or there'll be two deliveries or two commissions, because we had a company called in and said, you know what, I should have been paid commission on this building, but we already paid it on somebody else. But this is how we fix things along the way, by running the serial number to make sure that we don't have any duplications. And if we do have a duplication, which is fine, because again, everybody makes mistakes, you have to go back and fix them. We fix them and make sure that at the end of the day, when this building's gone, it's sold, and it's hopefully paid off, that they all look like that. And every serial number that we get goes through the process. So when we go through this, we actually pay our buildings by ACH or by checks. The way I've set it up in the department is we have one person that actually inputs the ACHs onto the bank site, and then somebody comes behind them. They run the serial numbers again. They make sure that we are buildings balanced that for that particular company, that everything checks out before the final button is hit, before 4 o'clock, so that we know with 98% certainty that everything that we've done that day is accurate to the best of our ability. Again, there's probably going to be a little wiggle room for error, but for the most part, we're usually spot on. The same with checks. The checks are actually inputted by one person, run by one person. They're given to somebody else. They again review everything before they're signed and sent out for the week. So we go to a great deal of trouble to try to make sure that there's no duplicate payments going out. There's nothing that'll kill you more or a business more than having a cash flow problem because you're paying people twice, or having a lot of phone calls because you haven't paid them at all. Okay, so we're going to kick it and talk a little bit about monthly reconciliations. The reconciliations, obviously, you've got your bank statements, you've got merchant account statements, you've got your account listings. Anything on the balance sheet should have a statement that goes along with it, whether it is a bank statement, whether it's you're not going to see merchant statements on it, that's going to be on the bank account. But you'll see depreciation. You should have something for depreciation. You should have something for your tenant security deposits, for your barns. If you can't run a report from your accounting software that says, this is the number of barns that you sold for that month, and this is the number of barns you have currently, you've already got a problem. Every account on that balance sheet has to be reconciled, every single one of them. Okay? The software that we are going to use, and we're going to kind of go through. So I'm not going to go through everything that, I could have put up a mock balance sheet and a P&L. The problem with that is I didn't want to show it all and say, oh, you got to go back this and this. So I decided to go through just the bank part of it because that's pretty intense all by itself. And then we're going to go through a couple of the other account numbers that you would see on your balance sheet. So this is a detailed report of your RTO software. That's what this is. And what we're doing is we're actually reconciling the credit cards, the checks, your ACHs, everything, all in this one sheet, okay? Some people do this weekly, some people do it daily, some people do it monthly, okay? But regardless of how you do it, and there really is no right or wrong way, I'm going to explain how the procedure actually works, and then I'll let you fill you in on how we do it and the reason why we do it that way. So as you can see from the report, these are the numbers that you're looking for. This is the CSV file of the bank statement, and it shows you this is what you came in, and this number here is from profituity, so it should tie up with the section that says H, which it does, and the same with your merchant checks and your clearance deposits, which is your credit cards. Okay, so every month you need to tie these all out. If you've got something that doesn't match, and what normally, if What usually in our world, or at least in our company, what is off is the credit cards or the checks, oddly enough. Profituity is not so much, but people that are using, you got to remember, I think of the RTO software kind of like a petri dish. Everybody has their hands on it, everybody. Your customer service people, your retrievals people, your dealer support people, the accounting folks, everybody's got their hands in it. If it's not clean here, before it gets into the accounting software, now you're having to clean it in 2 different places. And depending on what software you have for accounting, it can be intense trying to figure out, how am I going to fix this? Especially when your accounting software is not necessarily, it's more for layman than it is for an accounting person. Then it tends to make entries in it that you probably wouldn't want or need it to do. And so you're having to think about it and think, okay, how do I fix this? And it's already wrong over here. And so, to be honest, that's why we do it monthly. When my background is in manufacturing. When I did manufacturing, every single day, everything went into the accounting software. That's just what we did. It all went in, you reconciled it there, life was good. But in the rent-to-own world, you can't do that because you've got all of this going on. And some of the companies that we had, they have 4,000 to 5,000 transactions a month. There's no way that something's not going to be wrong with it. Whether it happened in dealer support, whether it happened in customer service, they did a reversal, somebody pulled something out that they didn't think would belong there, or they put it in a different number. Something happened in this. If you don't get it cleaned here, then you're putting it into the accounting software, and the accounting software now has the problem as well. I tend to like my accounting software clean. I have 5 people, and they should be the only 5 people that ever touch it. And I can at least tie it up and say, okay, what happened here? But if you don't do that, if you let everybody in, it's like letting loose a mess of kids into a candy factory. They're all over. Their hands, and everything's sticky, everything is everywhere. So that's why I refer to it as a petri dish. Everybody's touching it. So that's our reasoning for putting it in monthly. Actually, my predecessor actually did it before I did it. And when I first got here, I thought it was wrong because, again, my training was that it all went into the accounting software daily. But after being there for about a month, I realized there's no way you could do it that way and have clean books. And that's the objective for an accounting person, is to know that they could show their books to anybody and know they didn't have a problem with it. I can talk to an owner, I can talk to a bank, I can talk to an auditor, and I know that whatever I'm showing them is accurate to the best of our ability. And that's what an accounting person wants. And that's why we started at the end, because this is the part that nobody else gets to see, the detail part, the part that has to be cleaned in order to get to the end. If you don't do this first, you have a few problems going later on. So we try to make sure that everything that we put in, everything that we hand out to our customers, to the bank, to our auditors, is to the best of our ability, is accurate. Okay, so this is what as we are processing the month end, this is what everything looks like before it gets into our accounting software. This report here at the top is actually a snippet. It's the summary of the payment report that comes from the RTO company, from our RTO software. The little snippets down here is from our accounting software. So if you notice, this is from our income, and it matches the income that's in the RTO program. You can run a daily, you can run a monthly, you can run a quarterly, you run a yearly, but at the end of the day, those numbers will match these. And if they don't, we go and look for them to find out why they don't. And there is no such thing as being $1 off, $5 off. You got to go find it. That dollar, that $5, it belongs to somebody. Whether it belongs to us, it belongs to the customer, it belongs to somebody, and you have to find it. We find it, and we're there until we do find it. Okay? So over here, this is a report up here on top. It actually comes from the customer listing, but it's at the very bottom of the report, and you can actually get a report that tells you how much money is in the deposits and the purchase reserves. So the two numbers together add up to that 17,000. That's what should be held in your security deposits. Again, this is on the balance sheet, and it needs to tie out every single month. So if you don't, am I that far away? I guess I am. Okay, so you want to make sure that it ties out monthly. It ties out at the end of the year. When you're talking to your CPAs are making an agreement with you to do your taxes. That's all they're going to do. They're not looking for problems. They're not looking for mistakes. They actually even put in their letters, we are basing your tax returns based on what you give us. If it's not accurate, that's not their fault. So unless you pay to have them review them, it is what it is. Okay? So you want to make sure that all of this is clean. And that you have the accountants are calling you up and saying, okay, well, do you have one of the first things, if I don't have a spreadsheet on something, or I have already calculated the depreciation or calculated the amortization, where's your spreadsheet? It ties out with that number. You want to make sure that everything ties out, that if somebody asks you a question, you readily have one for them. Your loans are tied out. You have a statement from the bank or a statement from somewhere that says this is what ties out with the bank, this is what should be on your balance sheet. All these numbers tie out with something. They aren't just numbers. We didn't just collect them. We are actually getting them ready to show to somebody. Okay, so I'm almost getting ready to wind up. So do you guys have any questions? No? Okay. So we're going to talk a little bit about how we got back over here. As I mentioned at the beginning, your financials, what you actually give to the bank, what you actually give to the Internal Revenue, the numbers are all the same, but they look differently. You are not going to give the same financial reporting to an owner that you're going to give to an auditor or that you're going to give to the Internal Revenue. The Internal Revenue is going to want to see everything. But before they get there, the first thing they want is to see your financials. You'll send them your financials, and I could get into a whole lengthy session on how to get through an audit, because there are several different audits you could get into, especially in the rent-to-own business. There's sales tax audits. There's audits within each state that they want to make sure that you're actually taking the correct amount of late fees and all this other good stuff. So you have to know your audience. You have to know who it is that you're giving this information to. Your numbers are all the same. What's different is how you're presenting it to the people that you're dealing with. You're not going to give the same thing to everyone. That's the important part. My purpose and what I wanted to kind of drive home to all of you and anybody that was here, and hopefully, and even the owners, you want to look at your numbers not just as numbers coming on a sheet of paper. that you're looking at the P&L and going, okay, well, you know, it says we're in the red or it says we're in the black, yay for us. How did those numbers get there? And how sure are you that they're clean? How sure are what you're looking at is accurate? You have to be able to depend on your team. Your team has to be going through all these different steps to make sure that what you're getting, you're comfortable with, and you know that those are real numbers that you're looking at. It's not something that, it's not a fairy tale that somebody's reading to you. You know, without that, you can't make good business decisions. You can't go back. It's just a tough place to be if you can't depend on what you're looking at. Okay? So, gosh, thank you very much for coming. I really appreciate your time.
Thank you. Thank you so much.
Thank you.
Did you have a question?
Your business card?
Oh, thank you. I do have little cards up here. It's got my email address actually on it. If you have any questions that you didn't get time, even though I asked, but if you didn't get time to ask or you didn't want to ask here, you can always email me and I will respond. So I'm in the office pretty much every day unless my boss isn't real lenient about giving me vacation time, but but seriously, feel free to contact me.